Good morning, everybody. Welcome back to the Schwab Coaching Channel. It's our Wednesday edition of Trader Talk in today's market, and I am your host, Kevin Horner, reaching you from a beautiful and spring-like Denver, Colorado. Pleased to be joined by my friend and fellow Schwab coach here, Brent Morris. Good morning, Brent. How are you, man?
Doing good, Kevin. Glad to be back on with you. And yeah, we got some spring conditions here in the Salt Lake area as well, although I think we have a storm coming in, so we may actually see a little snow. I'm not sure here coming up in the next day or so, but that's spring. We just wait a day or so and it changes. But I'm glad the grass is green and trees are blooming.
Yeah, it's certainly green here in Denver as well. I was in Detroit this weekend at the workshop, of course, had a great time there. Got to see a lot of faces and shake a few hands. Hopefully, we've got some of you in attendance today that were at that event. And just a great reminder of how much fun we coaches get to have at those places. So if you have an opportunity to join us for one of those, please consider it, everybody. Today, we, of course, are going to dive into the look at the market. We're going to check out all the major indices. There's some stocks in the news today on some upgrades, some downgrades, and we heard about a bit of a hit to NVIDIA this morning, actually late yesterday, that has maybe sparked a little bit of weakness today. So we're going to cover all of that with all of you. So if you haven't already done so, take a moment to say hi to Barb Armstrong in the chat there. She'll keep an eye on things for Brent and me today. You can follow the three of us, though, on X if you're not already doing so. Barb Armstrong, CS, Brent Moore, CS, and Kevin Horner, CS. Try to post for you there on multiple times throughout the week. Give you some charts and data points of note, some things to keep an eye on, of course. But it's a great way to engage with us outside of the classes we teach. So if you're not already doing so, please consider that. Now, let's get to some disclosures, and then we'll get into the charts of the morning with all of you. Remember, our conversation here is exclusively informational and educational. We do not make recommendations nor endorsements for any particular approach or method for trading the market. We do talk technical analysis, though, meaning we look at a lot of charts. We cover some of the concepts that traders may choose to employ, try to provide a little education on the why they might choose to employ them. But ultimately, it's important to remember that technical analysis is simply a piece of the overall puzzle, and we do not encourage you to make decisions exclusively off technical analysis. As far as an agenda is concerned, everybody, this is how we break things down. It's kind of a three-part show, if you will. Broadly, the first 15 minutes hit the major indices with you. We move into sectors and other tertiary groups, industry groups, etc. in the second 15 minutes. And then our final 15, we try to save for stocks in the news and look at a lot of individual equity charts there as well. So plenty to get to. Let's see how things are looking this morning with the S&P 500, Brent. We've had some volatility. The truth is, volatility has waned a little bit. We're going to look at a VIX chart. But, Brent, a lot of traders are feeling a little less comfortable, even though volatility has waned. Why would that be, as we've seen the bounce back here in the market off of lows?
Well, we've certainly seen, the volatility has come down. And if we'll look at the VIX later. But, yeah, it's come down, but it's still high, number one. Number two, there's still so much uncertainty out there. First of all, we've just kicked off earnings season. There's uncertainty about that, but that's really not what's driving the volatility right now. The uncertainty, and people do not know what's coming up in terms of the economy is really what's driving that, I think, and so. We had the move down. You can see that in the SPX. We had a little bit of retracement, but that seemed like more of a reaction to perhaps a little bit of too much, too quick to the downside. And now it's settled down a little bit. You can see that just the size of the candles. Just look at the size of the candles over the last 3 days, 4 days, maybe, as compared to what preceded it. So that's kind of nice. It feels a little bit better. I don't know how to quantify that. Well, I guess we can maybe a little bit with the VIX, but just in terms of how I'm feeling, and I think others are feeling maybe just a smidge better than we were a week ago in terms of volatility. Mm-hmm. But still, there's a lot of uncertainty in my mind, I'll tell you that.
I think that's exactly it. As much as anything else, obviously, we continue to be fairly, let's say, tied to the headlines, right? I mean, we got
Yes.
a big headline on Saturday that there's going to be some exemptions to consumer electronics, computers, phones, et cetera, some of these tariffs, and still trying to parse every single one of those comments and tweets that we continue to get. So, yeah, it still remains very difficult. I think the concern for a lot of traders, though, might be the fact that while the VIX has come back down, and again, VIX as a mean reverting measurement, you're going to see that, right? Spikes to the upside in VIX are typically short-lived, and we get reversal to the mean quite frequently. But as you said, VIX remains a bit elevated. And the fact is as much as the VIX has come down, I think bulls would have preferred to see a much greater bounce than what we have gotten. So let's talk a little bit about just the bounce that we're looking at here. If we just stemmed from or went back to when things really started to get weak, where we saw this real volatility spike, it was with the selling here from April, right? So if we just looked at the peak, actually the last peak here in March when things really started to get dicey. And we just drew, Brent, a Fibonacci from that peak, which was a doji day, a day of indecision, and really started to move lower since then. Look at where we've rallied back to. We've pushed into the 61.8%, Brent, but haven't been able to push through with any validation, right? No multiple days closing above it. Sure, we're holding 50%, but the bias still feels bearish to so many traders here, Brent. And now we have to point out that today we're trading below the low of our high day in this bounce back. Does that stand out as a potential concern?
Yeah, there's a lot of potential concerns on this chart. Number one, you mentioned the Fibonacci's. Number two, if you were just to draw a line, so to speak, from the highs, the March highs to the peak we hit on about, I don't know, March 31st maybe, and down to our recent peak just yesterday or a couple days ago, somewhere in there, you're kind of in that range there. We have a trend. You can look at that 20-day moving average as well, where we have a series of lower highs there on that, and we were not able to breach the high that we peaked. What was about the big green candle there? That represented a high. That's really, in my mind, a key level. Being able to go above that. In fact, you have a kind of a horizontal line drawn there. That's kind of where, if we can break above that, that would be a very strong technical signal. Well, we haven't done that. And where the fact that now we have a close below the low of the high day, or a move below that low at least, we'll see how today goes, but everything is looking, the chart is mostly looking pretty bearish right now, I would say.
Yeah, I would love to disagree with you, Brent, and I know that would make for better show type commentary and whatnot. We get a little back and forth as opposed to, I tend to agree with exactly what you're seeing. But I think many traders are seeing the same thing. Downtrend line, resistance being met at 20-day moving averages, failing. 2 days above it, day 3, you're below it. 1 day above it, quickly back below it. Here, we couldn't even get to the 20-day on our bounce back. So, there's a multitude of overhanging levels we got to work our way through. And I think the reminder is that if you want to be bullish, that's fine. But force price action to dictate that bullishness prior to taking positions, meaning don't forecast a breakout and take positions looking for the breakout. I think that the defensive nature here will save bulls a little bit of headaches right here, Brent, because right now the action of the market, and if we just break it down to an intraday balancing act, we're seeing bear market behavior. Rallies into resistance are sold and not breaking out very commonly.
Yes, and I guess another thing I would say is this, and maybe this is a little bit more of a bull, maybe here's the bright side, I guess, and it's not going to sound super bright when I'm done with this, but there's different trends in the market. Kind of our intermediate term trend we've just talked about, it's going down, no doubt. Longer term, it isn't so hot either. But if you go to the short term, if we do maybe a 10-day chart or something like that, what we're going to see is things are going to look a little bit better here as we do that, and as you go, you can look at different time frames, and over the past week or so, what we're seeing is, yeah, price action generally has improved, and maybe that was just a reaction of we had oversold a little bit, but we do have on the real short-term time frame some higher lows on that. That's maybe the best bull case I can say, and they're going to kind of come into conflict with one another. Either one has to give, either the more intermediate term trend needs to give, or that short-term trend needs to give.
Yep.
More often than not, I think the intermediate term trend is the one that traders focus on. But hey, it's got to start somewhere, and it's certainly better than if it just had continued to go down, and our VIX was still up at 50 right now there.
Well, yeah, that would be, maybe we'd be looking at some capitulation or something along those lines. We got some of that obviously back here when we found that real low at 48.35, and you've seen the volatility bring us some corrective bounces, if you will, maybe just some relief. But the fact remains, we've not seen anything more than a relief bounce, and that stands out. So be aware. Could things be improving? Potentially. You might find some opportunities on these shorter term charts, and they might give you a little bit of clarity prior to these breakouts. For example, if that green line that I drew in there at around 52.95 maintains and we don't trade below it, bulls are going to stay optimistic in the short term here about our opportunities. But trades back below that ledge are going to look pretty uncomfortable for the long side here, probably. So something to keep an eye on the SPX, at least right here, Brent. Any wrap-up thoughts on the SPX?
Yeah, let me just address two comments in the chat. One, would there be support at the middle of the big green bar? Yeah, possibly. Sometimes we'll look at support levels at 50% of a bar, and indeed we bounced off there about 3 days ago, right around that level. So that's a good thing. Why is today's candle showing green is another question. Well, it's showing green because we're above where we opened. We're below yesterday's close, so we're down for the day, down almost 1% today. But from just in terms of the intraday action, we're above that. That's why that candle is showing green there.
Excellent detail there, Brent. Thanks for sharing some specifics for our viewers. Make sure everybody understands what we're seeing on the chart here. Let's move into the NASDAQ 100. That is the NDX. You're seeing a bit more selling here, 1.5%. We talked a little bit off the jump about why this is. This is all likely tied to the overnight headline on NVIDIA. They're going to be taking a charge in Q1 of $5.5 billion. And that is something that they heard about apparently last week, Brent, and didn't decide to make that known to the rest of the market as we were all bouncing back in a relief rally, but certainly not going to be digested favorably here on tech stocks, NASDAQ 100, semiconductors, etc. No,
and when the market's going strong, more often than not, tech is leading the market. Right now, the market's not going strong. What we'd like to see is tech to kind of lead us out of the challenges that we've had, and this is putting it off a little bit more, and this was kind of came as a surprise to a lot of us, and I just wonder what other surprises are lurking going forward here, which is one reason why I think these are the kinds of things that give us a little bit more pause in the market, a little more anxiety, and keep implied volatilities up. But this is NVIDIA is a big company. It's semiconductors are getting hit on this, and tech as a whole is getting hit on in terms of the NVIDIA thing.
Yeah, you've got a lot of ways to monitor this, Brent, whether you're using the orange 20-day moving average. We've been rejected a few times there. Notice these bounces have been clean right into it, and clean rejections. You got to pay attention to that, everybody, because these are this is trend, right? This is a new downtrend. And when we have a new trend in place, like I stated just a second ago, we need the price action to dictate shifts. Don't expect a shift. Don't don't lead the shift. Meaning, if you might very well believe that a breakout's coming here, but try not to position yourself for such a breakout until the breakout occurs. You might even choose to be patient, adding in some confirmatory signals, one of which might be 2, 3, 4 closes over your resistance, meaning maybe 2, 3, 4 consecutive closes above the 20-day moving average. Some of you might find some comfort from that. Somebody might want to see a new high in the RSI. Brent, we just got done talking about bear market behaviors. Well, one of those bear market behaviors is looking at the RSI losing steam in the area between 45 and 55. When you're in a downtrend, 45 to 55 becomes your overbought conditions. And that's kind of what we're seeing here with the RSI as it relates to price action in the NDX.
Yes, in the downtrend, if we're staying in the lower half, below 50, the longer we stay down there, that's just my confirmatory of a downward trend. And so, that's not positive. One thing I would say on the NASDAQ chart, and it's the same as this SPX chart, that big green candle that you can't miss, the top of that is a key level, I would say, it seems like, for us to break through on the upside. And because not only is it the high there, but it corresponds to the low that we hit, I don't know, a few weeks ago now at this point. But same as the SPX, we weren't able to break above that, and that would be a pretty big break, I would say.
Yeah, it would. Obviously not there. And the other thing we're seeing here, Brent, consistency amongst the majors once more. One of those is the so-called death cross on both the NDX and the SPX 50-day moving average crossing the 200 to the downside. A lot of traders tend to look at these as bigger shifts in trend. They can absolutely be that, but in order for them to not be that, we'd need to see some pretty speedy price action that would maybe change things. And obviously that would mean a shift to trading above that orange moving average, maybe even pushing back into the confluence there around the 20 and the 200 and the 50-day up there around 20,000. That's quite a ways off given what we've seen here, Brent. So is there anything about the so-called bear cross or the death cross here that we're seeing in both the SPX and the NDX that should give traders additional pause from what we've been seeing over the last couple of months?
No, I mean, it's just a longer term. It takes a while for that death cross to come about. And I mean, even as of about a week ago, as bad as the market was, we still hadn't seen that. And so, I don't know that that's telling us anything that the rest of the market isn't right now, to be in my mind, I guess. It's kind of almost expected. It was like, when was this coming? We knew it was coming. And, there you go.
Yeah. All right. Well, let's see how we're handling things here with the Russell. The Russell, actually one of our relative strength groups today, only off a little less than 0.5%. We've got a lot of stuff drawn in here. The lead here was, look at the move to the 50 through the 200 to the downside there. That really picked up steam when that happened back in late March. It hasn't gotten any better. So I guess if you were going to say, well, it happened this way in the small caps, in theory, you could say that you could maybe think that this could continue the similar manner in both the SPX and the NDX. But really, I mean, this is still the same stuff we've been seeing, Brent. Some consistency in the trend, movement against the 20-day moving average, very speedy moving average for these big indices to be failing against, telling us that we have taken down quite a few levels here in the recent history.
Yes, and in terms of percentage drawbacks, the Russell has actually drawn back more than either of our other major indices that we've looked at. And I would say, hey, again, look at the big green candle, still haven't broken above that. I think that would be a level to break above, and not that all be well necessarily just because if we break above there. But, a change in trend starts with small things. That would be a small thing that it wouldn't necessarily mean we're in an upward trend at that point, but it's a kind of a precursor to that.
Yeah, and you called it peak to trough, just around 30%. Not great. Happened over 92 bars, which comes out to about 4 months, 4.5 months. So that's a pretty healthy, speedy correction. Unfortunately, Brent, we can't say it's over, can we? Here, we've got a lower high here versus lower highs. These bear flags that are continuing to show rear their ugly heads. Unfortunately, 20-day down sloping into former resistance. 1925 looks like a pretty good level, above which we'd like to see the Russell trade. But Brent, there's no guarantee of that. I mean, I keep looking here, and everything I see validates the downtrend here. I mean,
Yes,
you've got an
that's a good
RSI
line
that's
you just drew. Yep,
keeps
absolutely.
going, doesn't it?
It does. And when we talk about, technical analysis, we talk at these support levels, we may look at RSI, momentum things, we may look at individual candles. But really, the thing that kind of, for a lot of technical traders, trumps everything is just the general trend. And until that general trend changes, there's just only so much bullishness you can read into the market. And right now, there's just not much. So because that trend is strongly down.
Yeah, and let's hit the semis, which are, like we said, going to show us a pretty healthy move here. The ugliness continues, a 3.5% move. Again, this is largely tied to what we got out of NVIDIA. Everything, though, remains the same, Brent. We've been talking the same stuff for the S&P, for the NDX, for the RUT, and the SOX. It's all the same. Failures against the 20-day moving averages, lower lows, lower highs. I'm looking for something that is different, and there is nothing different amongst these major indices. So not exactly the level of consistency we want to be seeing.
Don't hold your breath too much on that, because there's not, I mean, I guess on anything you can find something positive, maybe, I don't know, but right now it's pretty bleak. If you look at NVIDIA, it's down, NVIDIA is down almost 6% right now. The SOX, semiconductors, so we brought it out a little bit, is down about 3.7%. The NASDAQ, more technology as a whole, is down less than that, and then the market is down probably a little less than that. So just the closer you get to NVIDIA in terms of the space, the worse it is today. NVIDIA is the leader down, but semiconductors, which again in a good market, it's something that I think a lot of us are looking to help lead us in a bullish. I don't know, a bullish market. It's nothing there from semis.
Not yet, at least. Try as we may. We continue to monitor, continue to look, but that trend, and again, I'll just point out, we've been talking about how it's been a struggle. This sideways action here was certainly tradable, but the break of the sideways range that occurred there in late February was very significant. Found support, bounced lower high, test, fail, bounce, lower highs. So just a nice bit of trend analysis along the way. There was a number of clear signals and a lack of higher highs in the bounces that kind of gave us a bit of a heads up. I hope the conversations we've been having here in Trader Talk have been instructive for all viewers. And again, right now, the negativity in the semis is pervasive. Unfortunately, you're going to have to continue to weather what could continue to be quite a storm on these. So in addition to NVIDIA's note overnight, Brent, there's a number of things from headlines that are changing. Bank of America made note here that they are making a shift, it looks like. So they announced that NVIDIA, because of the U.S. government are now requiring a license to ship the H2O and equivalent AI chips to China and arms embargoed countries, the company plans to take that $5.5 billion charge in Q1. Now, the firm, Bank of America, interprets this charge as indicative of a high probability of H2O restriction and a low probability of future licenses. So that's basically, Brent, what they're telling us is that everything that NVIDIA's price action's been built on might not come through in the wash in the long haul, right?
Yes.
So everything we've been basically rallying the price on is not necessarily going to come out in the long haul.
Yeah. One of the comment in terms of as we're looking to see, signs in the market, and we've talked about, well, maybe stocks could lead us out of it. If you look at semiconductors, they peaked back, I think, about mid-year. Could you bring up a stocks chart there? And go, they peaked back in July of last year, okay? And we're down from that. If you look at like the Russell, it peaked back in, I think it was November of last year, and then it started coming down from there. The rest of the market peaked after that. I think it was January was where we saw our highs or the NASDAQ, maybe not.
Yeah, mid-February, basically.
February, early February, you got it. So it's like were those kind of a precursor, a warning, an omen for us that, market's starting to get a little more iffy here at that point, and they're just the forerunners. Maybe on the flip side of things, hopefully they're the ones that actually start to lead us out of that. So
sure would be nice, Brent, because we haven't seen it. 4% down here. We are in danger of a potential revisit of our lows. This is a very wide, I would say, very wide berth in the price action over the last 2 weeks here, but it still looks the same. I mean, if I drew the line right through here, some traders would tell you that that's a breakdown of that, potential bear flag. And the fact that we've broken through that so-called uptrend line in the short run here could be evidence of a deeper retreat, which might mean at least matching lows at the 3,400 level and potentially lower than that for a lower low. That's what we have to be thinking about. And again, the reason I say we have to think about it, Brent, is because we're always talking trade management and the encouragement to understand true risk. And I think this last couple of weeks has been a good example and a case study of that, because ultimately, again, the market doesn't find bottoms where every trader wants that bottom to be. The market finds bottoms by exceeding those levels and taking traders out, making you feel the most uncomfortable possible, and then getting a bounce. That's what capitulation is, Brent. And I don't think we've seen that yet.
I'll tell you this, and this is maybe just an admission. I'm almost always wrong in terms of when I'm trying to pick where the market is done. I can, when I look ahead and go, well, this is the bot. I never know. You never know. You just never know when the market's going to pick its bottom. The market doesn't listen to me.
Nope.
And it's hard to predict. And so we'll see. Now, I guess the good news, we still have held the low that we hit a couple weeks ago. That low right now it hasn't, we're still a ways away from that on the stocks, on the NASDAQ, on the S&P 500. We're a ways from it on all those.
Yes, we are. So we'll take some semblance of optimism where we can find it. It's not fantastic. But let's look at let's see here. Where are we on our time frame? We're at that last 15 minutes or so. We highlighted a little bit of NVIDIA. We got a lot more individual stocks in the news. But Brent, let's take just a couple of minutes and let's look at some of those important areas that we want to make sure we touch on today. One of those was the VIX. We talked a bit about how the VIX has retreated, but this is what I was mentioning, Brent. Yes, we have a VIX that has pulled back nicely. Yes, we had a VIX over 50, over 55, and now we have come down dramatically. But we have not seen that the bulls completely used all of that negative VIX to just get us right back on trend. That hasn't occurred. So the concern here is that the VIX remains elevated, but not necessarily spikes like this. It's spikes like this that bulls get excited about, Brett, because they know they are very short-lived and they love to buy those big spikes like that. The concern I have is that it's not going to give us one of those big spikes, but that we just remain elevated and witness some orderly selling into the downside. That would be a bit concerning for me. But what are your thoughts as it relates to VIX?
As long as we're in this kind of headline news-driven market, the VIX is likely to stay elevated. I mean, we always are to some extent. News drives the market, but this highly uncertain market, I see the VIX staying higher. And, it's weird to think, well, we're only at 30 on the VIX. Well, 30 is pretty high by traditional measures. A 30 VIX implies a 30% plus or minus expected annual move in the S&P 500. It also implies roughly a 2% daily move and 2% is pretty big, and it tends to understate, that rule of 16 tends to understate the daily movement there. So we had this week we've had kind of a nice lower, a little less volatility this week, felt a little bit better. It is a holiday shortened week, everyone, by the way. But it just is telling us that we're not out of the volatility woods yet.
That's clearly the truth, unfortunately. And I'm glad you mentioned that. Yeah, Friday is Good Friday. That is a market holiday. That means not only will the market be closed, but we will not be hosting shows on Good Friday. So just a heads up. That might be a good day for archive. It's generally speaking, it's a good day for us to get some development done. That's how we spend the day. But for those of you wondering, the archive and the YouTube channel, a great way to spend the day on Friday ahead of Easter. All right. What about the transports, Brent? We talk about groups leading us lower or higher. Unfortunately, the transports have been signaling a bit of a shift to our economic situation here for a while. The breakdown occurred here with the broader market in February, and boy, it has kind of continued unabated. We've had very limited rallies. The rallies have been into resistance like you had here, pretty clearly a bear flag. Now you've got another very wide bear flag in the transports. But Brent, once more, we can learn a little bit about the overall economic viewpoint by keeping an eye on some pretty specific groups. And in this case, certainly the transports is one of them.
Yeah, transports down about 25% right now from the high. That's actually a little better than what it was a week or so ago. That's one of those groups that we often look as a leader in the market. That kind of goes back to Dow Theory as transports leading the market. And again, no reversal on this. Again, we probably want a good first sign would be breaking the high of that big green candle. Don't have that. That, by the way, is pretty close to your 20-day moving average. And I don't know what else to say. There's different ways to look for market turnarounds. We talked about tech trying to possibly lead us out. Semiconductors, transports are an alternative to that, to look for a leader, and we don't have that right now.
And Brent, you mentioned Dow Theory. I'm going to bring it over here. I've got the whole setup on Dow Theory just to highlight this, everybody. So here's what we're looking at. These are two weekly charts, Dow Jones Industrials on the left and the Dow Jones Transports on the right. Both are weeklies. And the biggest thing, Brent, is the transports leading us down to the downside. Yes, the Dow Industrials remain in what appears to be an uptrend using that weekly 200-week moving average. And yet you're not going to be feeling really good about the look here, Brent, because even though you've got industrials holding on, transports are clearly breaking down. So what you want to see is these two moving in concert. The concern is that over the longer haul, we might be seeing leadership to the downside from transports, meaning we may very well see industrials break down as well. So the industrial average, that is, the Dow 30. So that doesn't bode fantastically, unfortunately. We got to bring that up. And then another one I thought we could check in on was our friend Rachel Deshelle brought us the market breadth chart just to give us something to keep a closer eye on here as it relates to what's going on in the S&P and looking at stocks over their 50-day moving averages. It looks like my designations here, my titles have gone away somehow, but basically what we're looking at here, this top one is the SPX stocks over the 200-day moving average, stocks over their 50-day moving average, stocks on the NYSE making new highs versus stocks on the NYSE making new lows. These aren't fantastic at this point, Brent. The thing that stands out to me is that we're not having a substantial amount of new lows right now. but that's because we've seen a little bit of a relief bounce in many cases. But this one is the one that's discerning to me. This one I don't like. This lack of new highs. Pretty well.
I would agree on that. That's a pretty low number. And we had that kind of big sell-off a couple weeks ago, and you can see that spike on the new low chart, the bottom chart there. And but most stocks have recovered a little bit from that, which is why that number is so low. But I guess maybe the one that looks a little bit better, it's still not great, is the second chart there above the 50-day moving average, because we are creeping. I think it got down to like 4% or something like that at some point.
Yeah, you're right.
And it was really low, stocks above their 50-day moving. And that's not like a massive, that's not like stocks at new highs. We're just saying it's above its 50-day moving average after the market really wasn't performing that well in the first place. So it's heading up. So there's one little, I know this is kind of a dour conversation here, Kevin, but maybe that's one little glimmer.
Well, you're right. I wish it wasn't so dour, but unfortunately we can only work with what we've got. The market's not exactly giving us a whole lot of positivity to hang our hats on. There's been a little bit of a bounce back in oil here, Brent. Let's take a quick peek at that. CL, we've broken down pretty aggressively. We talked about the importance of that $67 ledge. We're not really going to look at this for anything other than, just the where we remain and maybe what it speaks to. This is talking more about the global slowdown than anything else, as I see. Is that your understanding?
This is demand side. And expectation of demand. And I mean, that's one good thing in the economy is there's different, I'm not sure how to word this. There's some things that can, when things get bad in some areas, other things can help out. And for companies that use oil, fuel to transport, or fuel to petroleum products to manufacture, prices going down in that regard. So from that standpoint, it helps, but the reason it's going down is not a good reason. It's not a positive sign, but at least when we're filling up at the pump, it may make it a little bit better.
Well, I'm going to take any level of better in my pocketbook whenever given the chance. This is certainly this is helpful to the inflationary story. Unfortunately, it's an insufficient balance against the conversation around tariffs at this point. So decreasing, sure, but not necessarily at a level that's going to maintain keep inflation under wraps. Unfortunately, the other one that I think is very notable here has been the move in gold, which just continues higher again. Let's not talk about it from a standpoint of necessarily levels, because I don't know what levels we're going to find here, everybody. 3,000 was a level not all that long ago, and we're already 10% above it. The thing that I want to remind us on is really, why is gold an option for so many investors at this point, Brent? And it's a flight to safety. It is a concern about the number of uncertain metrics in this market right here. I think that's why we continue to see gold push.
No doubt. Yeah. I mean, I think that's the clear-cut reason why gold is going up so strongly, is people they look to the bond market, and they're not seeing, the bond market's not doing what people often expect it to do as an alternative to stocks, equities. The bond market's actually been selling off some. And so this has been the kind of reliable flight to safety measure, the standard that we've seen lately. We're at an all-time high yet again. I'm a broken record here. I've been saying that for months now. Another all-time high, and that's not advice to people to go out and buy. I don't know where the high is going to be. At some point, it'll peak out, and sometimes when things peak out, they can reverse pretty significantly. However, right now, this is where people are going.
Yeah, and I think it's just a comfort situation, Brent, more than anything else. There's just so much, obvious uncertainty. People are People are feeling a little bit like they need some exposure to something. And this is, we say it all the time, Brent, there's a bull market somewhere all the time. There's been a bull market in gold for a while, and traders and investors alike who've maybe had a small position have maybe been balancing some of the overall broad market weakness with, a small portion of investment in precious metals, gold notably. There's also been improvements in silver, of course. Now, we've only got about 5 minutes left, Brent. Why don't we hit up some of these stocks in the news that are better? But I want to lead, since you used the term dour, and it was perfectly appropriate. Let's just make note of a couple of downgrades first, and then we'll hit a couple of upgrades. Target was downgraded by Goldman Sachs. This is interesting because they've been so depressed already. So my question is always going to be, hey, if a company is down as much as they are, in this case, looking at Target over just a 1-year basis, everybody, I mean, we're talking about being down here at this point already 46, 47%, not great. And that's just a 1-year move. But they've been downgraded at this level. I think it's interesting because it could be one of those deals, Brent, where a downgrade doesn't lead to more selling, but maybe all the bad news is finally out of it at some point. They've been downgraded to neutral previously from buy, and the price target adjustment was substantial, down from 142 to 101. But I'm looking for something different, Brent, and we haven't seen it yet here in Target.
Yeah, I mean, look, the Target is down 1%, a little over today, but that's pretty much in line with, I don't know what the latest on the SPX is, but down about 1.2% right now. So this is just right in line with the rest of the market right now on the heels of a downgrade. So it's almost like the market is saying, so what, tell me something new, because we already know we're struggling here. So that's, in a weird way, that can be a good sign, because it's just telling us it's been priced in. The bad news has been largely priced in. Now, it doesn't mean that Target is going to go up, but it may mean that it may react a little bit more in norm with the rest of the market. I mean, obviously the whole market has been down for a few months now, but Target's been down for a lot longer than that. So it was going against the market for a while. Now it's kind of going with the market. And hopefully, if the market as a whole recovers, this will go with the market at that point. I don't know.
Yeah, I don't either, but ultimately we're going to, we need to look for something different. And, bear market behaviors are things like starting good in the morning and fading in the afternoon, not holding morning gains, not holding overnight moves. But the opposite of that can be true as well. Negativity leading to price action that improves. We tend to see price action improve maybe on after the worst of all news is out. And, we haven't gotten it yet, but it does mean maybe it's something worth keeping an eye on. There are a couple of upgrades today. Let's just get through a few of these. Cloudflare is one of them. Mizuho upgrading Cloudflare to outperform from neutral. Price target here down a little bit. Was at 140. They dropped it to 135. There was also another one on Caterpillar that I found intriguing, because again, you've got an upgrade after, in this case, after a big healthy move to the downside, Brent, in a group that has obviously been kind of weak here a little bit, but they got upgraded by Morgan Stanley, equal weight from underweight, new target at 283, down from 300. Again, I'm feeling, Brent, that a lot of these analysts are making adjustments along the way based on tariff expectations.
Yes, and there are also a lot of these, like Caterpillar, when you look at the chart, we got earnings coming up, and that's just going to be true for most of the companies that we're looking at. We're going to have earnings in the next 3 weeks here. And so that will help to clarify some things, although I think a common theme you're going to hear is there's a lot of uncertainty, even among, because, a lot of times on earnings, what drives the earnings is expectations, forecasts, guidance, and they're going to be probably a little lighter on guidance. They're going to hedge their comments on guidance, I think, a lot. Probably true for Caterpillar, probably true from others. But that may help a little bit to a certain extent to have earnings come out where we can get a little better view.
Yeah, and I think you hit the nail on the head, Brent. Expectations are to hear much more as it relates to the what do we think we may very well be getting going forward? What are the things we're going to be expecting, and how much of an impact are the tariffs as we know them today potentially going to play? You're going to hear a lot of where prior months, prior quarters, Brent, we've been hearing a lot of AI in guidance and commentary, and now it's going to be a lot of tariffs and the impact of tariffs on guidance and forward commentary. I think that's what traders are going to want to pay attention to in the upcoming earnings, and there are many as we go forward for the next month. So as always, Brent, great discussion on a Wednesday. I also want to thank you for stepping in my absence while I was traveling, but love having you on. Thanks for sharing your thoughts, your insights with our viewers today.
Thanks, Kevin. Love being on. Look forward to Wednesdays always, and look forward to next Wednesday as well.
Absolutely, as do I. So big thanks, everybody. Big thanks to Barb in the chat. Follow the three of us on X as Barb has instructed you there. Kevin Horner, CS, Brent Moore, CS, and Barb Armstrong, CS. Barb is up next, actually, with our upcoming class, Trading Index Options. So that is right around the corner at top of the hour there at 11 a.m. Eastern. So make sure you got that one on your list, everybody. But big thanks to joining us today. Hope you all have a fantastic Wednesday. We look forward to seeing you all again real soon.